Hello and welcome to Market Domination. I'm Julie Hyman. That's Josh Lipton, live from our New York City headquarters. We are giving you the ultimate investing playbook to help tune out the noise and make the right moves for your money.
And here's your headline blitz, getting you up to speed 1 hour before the closing bell rings on Wall Street.
I think it's important. We do have key data releases coming up. We have the jobs report this Friday. Next week we have the CPI inflation report. We have a retail sales report ahead of that meeting. So all those, I think, will go into the decision. But at the moment, it seems likely they deliver a 25 basis point rate cut. Beyond that, I think you see Fed officials beginning to stake out a view that they might want to begin to skip or slow the pace of rate cuts.
Overall, you have a balance of a company that should accelerate revenue growth into AI and margins that are still well below that of their peers. So their margins are going to go from low 30s to high 30s. Still big leverage. So you have leverage on the top line with accelerating growth. You also have leverage in margin, and you have now signs again that they've actually given organic innovation to the story, and that's like we just haven't seen that Salesforce for a long time.
Get the popcorn out. Because when you look at the AI party, now it's about the second, third, fourth derivatives playing out. I think Salesforce was the key moment last night this AI party, it's 10 p.m. and it goes to 4 a.m. I think tech stocks are up over 20% next year as the bears continue to have trouble finding AI in their spreadsheets when they're hibernating in their caves.
We got 1 hour to go until the market close. So let's take a look at the major averages here today. It looks like we're on track for records once again for the Dow and for the Nasdaq here for the Nasdaq and for the S&P 500. The Dow may get there depending on where it closes on the session. But among many things that we are watching, Jay Powell just speaking at a conference a short while ago, speaking on a broad range of different issues. One of the most interesting things I thought, Josh, he talked about this idea of a shadow Fed chair, the idea that incoming Treasury Secretary Scott Bessent would announce and sort of would encourage Donald Trump to name a new Fed chair well in advance of when Powell's term is over. And then that would sort of take some of the teeth out of forward guidance. And Powell said, I don't think that's going to happen. I think these institutions are very strong the way that they have operated, and he thinks that they will continue to operate in that way.
Yeah, he did speak about kind of relationships and just said generally, listen, he would expect to have the same kind of similar relationship with this new administration as he said he does with the current Biden administration.
He also revealed a secret talent. He can see words in his mind backwards and say them backwards.
That is
very
talent.
Quickly.
How is that useful?
It's not.
It's not. But it's different. On monetary policy, let's get to that, because he says the Fed can afford to be cautious here as they lower rates to that neutral level. Now, what exactly cautious means, we can guess, but we take his general point. Said inflation, as we know, it's not back to where Jay wants it to be. I think the key line here, though, is on the economy, sounding constructive, saying that no reason, he basically said, the economy can't continue growing.
He said it's been in remarkably good shape, was the way he put it. There's also some news out of Washington we got to talk about. President-elect Donald Trump has announced via Truth Social that he plans to nominate Paul Atkins as the chair of the Securities and Exchange Commission in a crypto-friendly move. Atkins served as SEC commissioner from 2002 to 2008 under the George W. Bush administration. He would succeed Gary Gensler as the new chair. What's interesting is now he founded a sort of consultancy in Washington that had crypto clients, but also a much broader suite of clients as well. But this was one of the folks that the crypto industry was really pulling for here to get this right.
I thought Anthony Scaramucci, who we both know Anthony, of course, friend of the program, Scaramucci, very vocal public critic of Trump, did post this on X, said Scott Bessent, Kevin Hassett, Paul Atkins, Anthony saying, have to admit Trump is cooking with his economic team so far. I think it speaks, Atkins, he's got the resume, he's got the background. He is, a real tested veteran financial regulator.
Yeah, and I thought it was also interesting what Trump said in his Truth Social post.
Yeah,
he talked about him being believing in a robust, innovative capital markets, but he also said he recognizes that digital assets and other innovations are crucial to making America greater than ever before. So being very explicit about the digital assets tie.
Yeah, very much. Well, listen, we know Gary Gensler has said, he will be leaving next month. And Trump obviously positioned himself on the campaign trail as a great friend of crypto.
Right.
And so Trump, I wasn't too surprised he would emphasize that. He's very much signaling to the crypto community his intentions.
Yes, and it's not subtlety is not something
No.
he does. So it's not surprising that he says it just straight out.
And that was the only name we got today.
Right, and another
one.
move, also President-elect Trump announced he's going to nominate Gail Slater as head of the Justice Department's antitrust division. Now, she has been an advisor to Vice President-elect J.D. Vance, and she sort of, like Vance, seems to be maybe on the same page with some things with Lena Khan, the current FTC
This
chair.
is what I thought this one was fascinating. Because
Yeah.
Slater is served, in the first Trump administration, FTC veteran, very much described as pro-enforcement, populist Republican, and to drill home that point, when Trump made this announcement, wow, did he go after big tech? I mean, rips big techs, and big tech's been running wild. They've been stifling competition, right? They've been cracking down on Americans and little tech, making that distinction between big tech, little tech. So I
Yes.
thought that was very interesting. It's certainly, Julie, if you read that, I don't think it would suggest to you that Trump would intend here to kind of break from Biden's stance.
Right. Well, and she's replacing Jonathan Cantor if she does indeed end up taking the role, who is kind of on the same page with Lena Khan in some respects. Well, AT&T held its Analyst and Investor Day on Tuesday, resulting in a bump to the company's stock. Yahoo Finance Executive Editor Brian Sozzi here with more. Hi, Brian.
Hey, thanks so much, Julie. All right, joining me now is AT&T CEO John Stankey. John, always nice to get some time with you here. I think it surprised a lot of folks at this Investor Day, outlining double-digit earnings growth by 2027. What gives you the confidence that you hit that number?
Well, hi, Brian. It's good to see you again. It's good to be with you this afternoon. Look, as we characterized yesterday during the Analyst Day, we've got a lot of momentum in key parts of our business. Of course, our largest business being the wireless company, and it's doing really well. We talked about how we're growing at nearly 40% of the service revenue growth in the industry over the last couple of years. That's really strong. Our consumer broadband business, our fiber business has been doing fantastic. It continues to take share. It continues to grow well. We're doing a really nice job at managing costs in the business, getting more efficient and more effective at what we do. And all the result of that is it's accelerating EBITDA growth and earnings growth. And as we also shared a pretty robust cash set of objectives that we rolled out for 3 years, and that's a good formula for success.
John, I've always known you to be a straight shooter. I mean, within this guidance, how much chaos from the incoming administration did you bake in?
Well, look, I'd actually view it differently. I think the incoming administration is very focused on trying to make sure that the economy performs well. Just heard a couple of your partners there talking about that before we came on. If I go back to the last Trump administration, certainly from a tax policy perspective, it was pro-growth and pro-investment. And maybe we're the poster child for that. We invest sometimes between 24, 25 the last couple of years, 22 billion moving forward. As a result of that, tax policy influences us significantly. And as we've seen accelerated depreciation and tax extenders start to sunset under the previous Trump tax laws, we've kind of pulled back on a little bit of investment as a result of that. If the administration leans into that play again and reinstitute some of that, we'll probably build fiber a bit faster than what we communicated yesterday with some of that extra cash that we'd have laying around. So I don't necessarily see it as chaos. My hope is on the tariff side that there'll be a very reasoned approach to it, that right now there's a good reason to talk aggressively. It's a good reason to set the expectation that if you want access to the best market in the globe, that it's got to be fair and equitable access, and that ultimately when tariffs are looked at and set, they'll be done in a practical and pragmatic fashion as opposed to being cavalier and reckless. And, I'm optimistic that people want the economy to grow and people to earn more money and do all the things that, the president-elect said that he wanted to accomplish on the campaign trail.
John, of course, you lead one of America's most iconic companies. And just listening to that response, I mean, it sounds like you're more optimistic on the next 4 years, perhaps compared to the prior time President Trump was in.
Well, as I said, I think the president-elect had a very strong approach to tax policy, and maybe more than many companies, we were impacted dramatically from it because we're one of the largest investors in the United States. And, we were investing billions and billions of dollars every year. And so when those pro-investment approaches are applied, it drives behavior on our part. And it's really good when we do those things because we're investing in local communities. It's in your local city, and we're hiring the local construction company to dig trenches, to put fiber in the ground, to do all the work that we want to do. And I think that that's a good thing for our business. It's a good thing for the American economy, and it's a good thing for competitiveness because we're putting infrastructure in the ground right now that's not just going to be around this year or next year. Fiber is something that lasts for 30 years. Great wireless networks drive innovation and software and capabilities. That's the kind of work we do. So I have every reason for an administration that's possibly going to lean forward on tax policy, and an administration that has said they want to take a more aggressive stance on getting spectrum into service, that this could be better for our industry and for investment.
Are you hopeful that the person that President-elect Trump nominated to lead the FCC, Brendan Carr, he seems focused on satellites. So let's say they do stay focused on satellites and appease Elon. How does that impact a business like AT&T, or does it?
Well, so it impacts our business, and I've known Brendan for a lot of years. He served on the commission for a long period of time. We've had a chance to work together as a result of that. I'm not just hopeful. I'm fairly confident that Brendan's a very reasoned policymaker. He's very, very smart. He understands the industry broadly, not just satellites. He understands the wireless business. He's certainly motivated about driving investment and getting off of last century's infrastructure with copper and sending companies to invest in better technology moving forward. And I believe that a healthy telecommunications industry has a variety of different technologies offering services, and satellite is one of those services. There's going to be some great things that happen for consumers moving forward as we see more satellite capability deployed. We're working with a competitor to SpaceX called AST that's putting a very similar service for mobile phones and mobile data up in the air that I think is going to offer consumers great choice. And I think satellite's an excellent way to serve broadband in rural areas, that we shouldn't be, building fiber out to farmhouses at $24,000 a home on taxpayer money. So I think there's some really good policy things that could come from it. And I think Brendan's a really reasoned individual, and he's going to find a sweet spot where the industry grows in total, investment grows in total, the U.S. is more competitive, and it helps the economy.
John, let me get back quickly to your investor day. KeyBank came out with this note saying a converged strategy, or your converged strategy, is where the industry is going. What is that? What is a converged strategy, and why is it so important to the future of AT&T?
Well, first of all, a converged strategy starts with the customer, and that's the most important thing. Most customers don't wake up in the morning and say, I relish having different relationships with somebody who gets me on the internet when I'm in my car, or somebody else who does it when I'm using the handset that's in my pocket, or somebody else who does it when I'm at home watching my TV. They just want to get on the internet. And so a converged strategy is about saying, let's make that easy for the customer. Let's have the customer have a relationship with a single company that can get them on the internet wherever they need to get on the internet with whatever quality and reliability they need. And at AT&T, we think that's a market opportunity that the customer is driving, and that our asset mix lines up really well to do that. We have a fantastic nationwide wireless network. We have the nation's largest fiber footprint. We're growing that footprint rapidly. And we think that since those are the forward-leaning technologies of the future, if you have more of it than everybody else, and you get it out there faster than everybody else, and you can put it together faster than everybody else, you're going to end up meeting more customer needs faster than anybody else, and that should be good for our company and the returns for our shareholders.
And John, you and I have talked a good bit in the past, and you and the team have worked your tail off in paying down debt, driving better business, driving a more focused company. This Investor Day, can you say mission accomplished? Turnaround is done. AT&T is back in growth mode?
Well, I can say that we're back in growth mode, and I would acknowledge what you said, that the team has worked its tail off and done a very nice job. of getting us to where we are. But I think we're early innings in our success story, Brian, so I don't think it's mission accomplished. I've talked frequently internally and externally that this next decade, the converged decade, is going to drive a tremendous amount of innovation and connectivity-based services, things that I think are pretty exciting. And I think that chapter is still yet to be written, and we still have work to do to actually realize it and bring it out to the consumer. So we've gotten ourselves in a position today where we can lean in and play offense. We've got choices on how we allocate capital, why we relaunched a share buyback program. We're still investing heavily in the business to bring that next generation of great services to customers that win in the converged space. And I'm looking forward to what this team can do as they start playing offense as opposed to just getting us back on solid footing and a solid ground that we sit on today.
Well, it's been fun to follow this story. Thanks for always making time for Yahoo Finance, and happy holidays to you and the team. We appreciate it.
To you as well, Brian.
All right, that's AT&T CEO John Stankey. All right, do stick around. Much more market domination coming right up.
Stocks higher today as investors digested comments from Federal Reserve Chair Jay Powell. For more on what's ahead for the Fed, let's welcome in Matt Miskin, John Hancock with John Hancock Investment Management. And Matt, you know, I thought that the chair's comments today were quite interesting. I mean, he did talk about, you know, that we're not quite to neutral yet. We're going to be patient. Yeah. What do we, as always, we have to read between the lines there. Are we going to get a cut in December or what?
I think so. I think the data is going to be strong enough, though, where it's going to be a hawkish cut.
Or sorry, yeah, hawkish cut. That's what it is nowadays. So, all right, so they cut, but then they tell you, look, next year, don't expect much more. This is going to be it. You look at all the soft landings before, it was 75 basis points a move on. And often in the soft landings, what happened was a year later, they actually raised rates again. So we have to be careful here. The jobs report Friday is going to be big. The inflation report right before. I actually, if anyone's asking me, I would actually.
I'm asking you.
I would hold. I would actually.
You would take a pause.
Because I think right now the economy is reaccelerating. You've got the risk of inflation coming back. You don't want to necessarily kind of push on this market sentiment and get a revival of everything in the next year.
So if they pause, Matt, your expectations for the dollar would be what?
Up.
Yeah, and then what are the ripple effects of that?
So the dollar, the way I've been saying is the crown is heavy, or basically being the king dollar.
Heavy is the head. Where's the crown?
Yes. So it's going to weigh on earnings, frankly. So 40% of S&P 500 earnings are from abroad. And so Q4 earnings are likely at risk because of that. And then we do have a disinflation undertow from it, which is good. The Fed's going to like that. But it's harder to be competitive on a global basis if your currency is the strongest in the world. We're competing globally for exports, and a strong currency is going to be a headwind. So stronger dollar is something that we think is going to be persistent here. We think actually the curve flattens, so the 10-year yield actually falls and the 2-year yield goes up. So the bond market says, look, you're going to take away growth, and that's going to actually cause a bit of a rally in bonds, potentially, more in the intermediate part of the curve. But also for stocks, I think right now they're priced for a lot of cuts and great economic growth. If the Fed pauses, that's a risk to the stock market in the next year.
Interesting. I mean, especially because, as you say, the market seems to be pricing in a lot of growth, a lot of favorable fiscal policy, and not paying as much attention to the monetary policy. Is that sort of at investors' peril? Yeah,
so right now, I mean, we've gone from a Fed put to a new White House put. And into next year, I think we're kind of still in the honeymoon phase of repricing markets for the new administration. Into next year, the Fed is actually the one to watch. Because in the 2016-17 scenario, Powell's actually asked about this. I mean, you saw his interview today. It's just, these dynamics are really tough for him to get through. But he was asked about it. In the 2016 scenario, he actually was on the FOMC. He said to raise rates right after this administration came in 16. And back then, inflation was a lot lower. So you're kind of saying, right now he's like, well, wait, we'll see how it goes. But the Fed of then would probably have been raising rates at this point. So I think a hold would be a better scenario. I don't see them raising rates right off the bat on this, but I think a hold would be a way of saying, look, we're going to see how this goes. We don't want to ease too much into a pro-growth policy. Let's just stay put. And then next year, if we need it, this is the other thing. You're using dry powder. This is the stuff, the cuts are there for when we're in a recession. If you ease too much before the recession or any economic, I mean, this year, we were just talking about this. Has anything happened this year that was negative? It seems like, at least in markets, I mean, it's up and to the right. It's been an unbelievable year. Save the cuts for when you need them. And I think next year, things look good. I'm not trying to say that, but if there's something that comes off the side, some tail risk, you want to have some extra dry powder. You use it now, makes it less potent for next year.
What are your worries for the market, Matt? Because this year there were some strategists coming out this week, and everybody, listen, this time of year they're coming out with their SPX targets for 2025, and some said, well-known strategists said, I did the work, I just can't find a reason not to be bullish.
Yeah, I think one of the biggest fears is that there's no fear in the market.
Right.
And the valuations are elevated. I mean, we're at 22 times. The last time we were this high, we got to 24 in 1999, and that was about it. So you've got about 10% upside on valuations, and then you've got this massive earnings growth built in. So we're looking at 15% earnings growth from the street. We're like, where are you going to get that? I get it, tech, some of the high-flying AI stuff, but otherwise, it's going to be hard to grow earnings like that. So the expectations are your worst enemy going into next year. For us, if we have quality stocks that are playing okay, they're pretty cheap. We're looking for quality at a reasonable price. That's how we're getting through it, but we're trying not to add too much of that. Frankly, we're looking at high-quality bonds around 5-6% yields. That looks pretty competitive to us. But the sentiment right now is just so positive on stocks, so negative on bonds.
I think that's actually going to help bond investors more than stock investors next year.
You mentioned tech as, are we going to be able to continue to see some growth out of tech?
I think you can't have this same, I know we've been on this show a couple times, like every time you think the AI space is like,
Yes.
all right, this time it's good.
Right.
And then the next year they're like, oh no, we're just killing it again. So we'll see in the next year, but it's just, you saw such huge CapEx from these tech companies getting all these new chips, getting all this new infrastructure in place. And it's just, how are you going to do that again next year in the same magnitude? And I think that's going to be hard to do. So we'll just have to see. For us, we do like tech. It's a high quality business. The biggest difference between now and 2000, these companies make a ton of money.
Yeah.
They have hundreds of billions of cash on the balance sheet. It's not like they're going away, in the next couple of years. So that's the best thing going for you. But if earnings don't come in, you're paying a lot for the stocks. And I think, for us, healthcare is one that's a contrarian play. No one likes it. It's done really poorly. That could have a comeback next year. We like utilities. These are boring companies, pay dividends, stuff
They're a
like
lot
that.
less boring this year.
I know.
That's one of the best performing groups because it's chasing tech.
It's been nice to be overweighted.
Yeah, I guess it
But
has.
you got the earnings engine and the boring business model. That's not so bad, but it's good to pair some of these ideas with tech because otherwise it's all momentum. And this year's been all about momentum, which means chasing stocks has been the best strategy. That's not exactly our favorite way to invest. We like quality, we like value, things like that. So we'd peel off some of that momentum, take some profits into the holidays, sit back, relax.
Have some eggnog. All right, Matt Miskin, great to see you in person. Thanks for coming in. John Hancock, Investment Management Co-Chief Investment Strategist. Appreciate it. We got some trending tickers now for you. You can scan the QR code below to check out the best, worst, most traffic stocks of the session on Yahoo Finance's trending tickers page. Let's take a look at Chipotle here. Guess what? Prices are going up. The company is confirming a modest price increase of about 2% across the board. I guess modest depending on your perspective here. But the company has not raised its prices in a while here, so confirming that it is indeed doing that. I think for the first time in over a year, according to the company, Josh. So your burrito, your bowl, going to cost a little more.
Remember, there were analysts who had said their checks showed price increases of at least 2% in some stores, and they were putting out notes saying, listen, we see this, we expect it to go kind of system-wide, and the company now confirming that. Analysts have said, at least some, looked at this, Julie, and said, in their opinion, plenty of pent-up pricing power to make this move without seeing any kind of resistance from Josh and Julie. We'll see. Stock up is around 40% this year, as we've talked about. This is one of those names where the street is just overwhelmingly bullish.
Well, and remarkable that the stock has been up 40% this year, considering that they had a leadership transition, lost a very popular CEO, of course, to Starbucks, replaced him with an executive from within the company. But if you look at the performance, not just of the stock, but of those same store sales, it is very difficult to find a fast casual chain, a food chain of any kind of this size that has that kind of consistent same store sales growth that the company's had over the past couple of years. And so that helps explain why the stock keeps going up.
It's a tasty, it's a filling
Now that you
burrito.
have finally had a Chipotle burrito,
I'm on board.
You're in. We told you.
A little late,
I'm glad.
but
That's okay.
Looking at Pure Storage, those shares, let's look at that. They are surging. That's after the company delivers an upbeat revenue forecast. We're up more than 22% in today's trade. The cloud storage provider Q4 revenue forecast does beat average analyst estimates. Did announce, and this was something obviously a lot of the analysts were writing about this, a design win from a top hyperscaler. And that's what analysts were really digging into. Piper's Jim Fish, who's a longtime analyst, did upgrade this one to overweight, raised his target to 76. Jim telling his clients the opportunity with this hyperscaler alone, he thinks, by his math, could be a $500 million plus opportunity in 26.
Yeah, I saw that. I saw that note too. And Krish Sankar over at TD Cowen calling this design win a big deal. And it's interesting because it's not as though the analysts did not like the numbers out of Pure Storage, but they said that the hyperscaler win was a bigger deal even than those numbers.
Huge move this year, 85% in 2024.
And adding to it today. Wanted to bring you an update here as we follow the latest developments in the deadly shooting of a healthcare executive in New York City early this morning. Brian Thompson, CEO of UnitedHealthcare, that's the insurance arm of United Health Group, was fatally shot as he was arriving at a Midtown Manhattan hotel, and police say it was a targeted attack, though the motive is unclear. The company saying in a statement, in part, quote, "Brian was a highly respected colleague and friend to all who worked with him. Our hearts go out to Brian's family and all who were close to him." The shooting happening shortly before UnitedHealth Group's Investor Day began, and the company did end that event abruptly due to the attack. The New York Police Department saying the suspect fled the scene on a city bike. It did have GPS on that bike, and it was last tracked in Central Park. Police say the manhunt for that suspect is still underway. We'll be right back. It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today we're diving into the semiconductor space. I'm here with MDB Capital Holdings President and Chief Market Strategist Lou Bassanese. It's good to see you, Lou.
Good to be back.
Thanks for being here. So Maycom Technology Solutions is the stock that you like today. Not quite as well known, but the stock has done well over the past year. It's actually trading at a record high, if I'm not mistaken, today, following some recent earnings. So let's talk about why you like it here. You're basically looking at the numbers.
Yeah,
I think they look good.
In this market, the momentum is a powerful thing. The trend is your friend. This is a 70-year-old chip company that most people have probably never heard of, but they make 8,000 different products, and they've had strong sales growth, up about 34% in the last quarter, and earnings were up about 30%. So it's one of those things, the stock's on the move, the momentum's intact. I think it continues.
And let's talk about where they fit into that chip universe, right? They're not making the buzziest chips.
No.
But they're making important chips.
Boring businesses and critical businesses make a lot of money, right? So they make the critical chips that handle the transmission of data, whether that's radio frequency or through light spectrum, microwave. Again, they have a big IP portfolio covering their products, over 8,000 of them. There's about 1,000 patents in the US and 1,000 patents and grants foreign that allows them to operate and really have a protected niche that they're earning really strong margins on.
Gotcha. And then there's also maybe kind of a policy or Washington, D.C. tailwind here for them.
Right, always with the momentum, we want to make sure that there's another boost along the way. So AI, everyone's talking about processing chips. What they make is actually the data center chips that connect and move that data around after it's processed. So a strong demand in the last quarterly call. And then defense spending, whether it gets pared back and reallocated, is going to really benefit this company because they have about 55% of their revenues generated from defense and infrastructure. So
gotcha.
you get a big boost from that as well with this administration.
As you know, we always like to talk about what could go wrong. And, we could potentially see ratcheting up of trade tensions, tariffs, export controls, et cetera.
Yeah, it won't be on tweets. It'll be True Social that would probably start another trade war.
Yes.
But look, I think it's a lot of just walking around with a big stick. There's probably not going to be a lot of big tariffs. But if they do get passed, there is significant exposure here to China and Asia for MACOM. So that is naturally a risk that would undermine the momentum.
Yeah, and with the stock having gone up so much, the PE ratio, I was looking at, I think forward P is around 41.
Yeah, forward. So again,
steep.
it is steep. We look at the NVIDIAs of the world, the Apples, and the Mag 7 are getting into the 30s, mid 30s. I think, again, it's all about earnings growth, right? I mean, your previous guest was talking about we've got to keep that earnings momentum and growth happening to keep the multiples in line. So I think that's absolutely the case here as well.
And then the next one, I feel a little like you're kicking a man when he's down, but it's Intel is the one you don't like here. Obviously, we know the stock has pulled back a lot. Pat Gelsinger just announcing his retirement from the company. Now, if you knew nothing about this company at all, if you didn't know what it was, and you looked at the chart, you might think, maybe it's getting to a bottom?
No, I'd think a penny stock that's going to bankruptcy.
Okay,
so,
wow, all right. So we just don't know what's going to happen with Intel.
It is. Turnarounds always take time, and especially when you have to bring in a second turnaround leader. It's not something where I think you want to put your capital when you have other opportunities out there that have a much more clear-cut path to get to that turnaround. So yeah, it can be attractive and compelling, but when's the last time you really heard anything buzzy about Intel Inside? It's just not. It's one of those legacy brands that everyone knows, household names, that aren't household investments anymore. I mean, I think of like Motorola, BlackBerry, Nokia, it's smartphones, but now over to the chips.
Well, unless you get memed like a BlackBerry did at one point.
Right.
And that's kind of your point as well, lack of leadership and innovation.
Yeah.
Perhaps
what concerns me here is it cultural or is it just someone at the top that's not leading well? Because they did miss out on an investment in OpenAI, which we know has become the leading edge of the market and the growth in AI. So why did they miss that? Those are questions. There's too many questions, not enough answers for me as an investor to think about putting capital here.
Right, and then there's also what's going to happen now in terms of the numbers and what's going to happen with the foundry business. I mean, we've talked to a lot of analysts who have said they don't necessarily think that Pat Gelsinger was not a good leader, but they think that the foray into making chips for other people is not where Intel should have gone.
Yeah, I disagree with that. I think they actually need to because that's the most clear-cut way for them to add value. Stop trying to be vertically integrated and make your own chips and innovate. You've proven you can't innovate, so why not separate out something where we desperately need more manufacturing chip capacity in the U.S.? So I think that's the other question here. There's low expectations. I've been around enough companies and CEOs and changes in leadership. Resignation is looks like more being forced out.
Right.
And in those situations, the board's going to want to flush everything, all the bad news down the toilet at once. So you get earnings coming. I'm going to assume that they're going to be worse than people are expecting.
Right. We'll see when they report next in January. What could go right? Well, we could get that flushing, and then maybe they talk about some big moves.
Yeah, the terms of the CHIPS Act make this a little bit more complicated because Intel's got to maintain at least, I think, 31 to 50% ownership. But again, spinning out a foundry business that we know is immensely valuable. You look at the TSMCs of the world, we know that business sells and delivers profits. Can Intel do that? Again, I think that's an execution question and maybe some regulatory question, but that would be very interesting in my mind.
And any position in Intel?
No positions in Intel.
Or in MACOM?
In MACOM, no. That's one that I've been looking at, and but regrettably haven't pulled the trigger on MACOM. But now it's after the last earnings report, something that's on the radar.
Gotcha.
So.
All right. Well, we'll be watching both of these in the chip space. Thanks so much, Lou.
Thank
Good
you.
to see you. And thank you so much for watching Goodbye or Goodbye. We'll be bringing you new episodes at 3:30 p.m. Eastern.
All right, let's get to our call of the day now. Shares of Roku are soaring Wednesday. Look at that, up over 10% here. That's after Needham analyst Laura Martin said she believes the connected TV company will be acquired at a hefty premium in 2025 as retailers look to better monetize their businesses through advertising. Having consumer data and advertising reach are important. As of Q3, Roku devices were being used in more than 85 million households, and users streamed 32 billion hours of video in the quarter alone. Of course, we know Laura well, Julie. So Roku is a takeout target. Why so? Basically, she breaks it down. She says, listen, it's the install base, unique data sets, pricing power, shelf space, buy versus build advantages, and says it's now the only scaled CTV platform that can be purchased.
Yeah, I thought that was really interesting, that basically, if you look at the other ones out there, if you look at a Samsung, a Comcast, Amazon, they're not selling this business, right? So she said Roku would really be the only contender, although Roku's founder and CEO would have to be convinced because he controls the super voting shares, she says. But, interesting that there just are not that many options out there if somebody wanted to acquire this. You and I were talking earlier about the data that Roku has as a result of its set-top box, or I call them set-top boxes, or just it's a plug-in now. It's not even a box in some cases. That the average viewing time in the third quarter was 4.3 hours a day, which gives them a lot of data.
Yeah.
But we're like, who's watching TV for 4.3 hours a day?
Yeah.
Their average viewer, apparently, or their
It's
average
impressive.
viewing time.
It's impressive.
I guess maybe there are super viewers who are pushing that number up, but man, I don't know.
And just quickly, who could be interested
buyer.
in buying?
Yes, tell me.
Laura says to look for, there's a few different possibilities. You could, not surprised, streamers, she says, your Netflixes, maybe big tech names, your Amazons, your Microsofts, your Alphabets. The stock has not worked this year, by the way. I mean, obviously tremendous, a nice pop today, but in the red, even with today's lift.
And she has been one who has been, sort of a fan of it for a while. By the way, one other buyer she said could be Target, because she's looking at Walmart buying Vizio as a potential model for that possibility.
All right, we shall see. Coming up, we are speaking to the former chair of the FDIC, Sheila Blair, to break down the latest moves by President-elect Donald Trump. Stick around, much more market domination still to come. President-elect Donald Trump is choosing Paul Atkins, former commissioner of the U.S. Securities and Exchange Commission, to chair the SEC. Atkins, who served under President George W. Bush as SEC commissioner, would be replacing outgoing chair Gary Gensler. For more, we're now bringing in Sheila Bair, former chair of the FDIC and former assistant secretary of the U.S. Treasury for Financial Institutions. Sheila, it's good to see you. So Trump has made it clear Paul Atkins is his guy. That's who he wants leading the SEC. And certainly Atkins, listen, tested, experienced, veteran financial regulator. What do you make of that news, of that pick, Sheila?
Yeah, it's a good choice. It's a relief. I think he's very solid. Philosophically, I think he'll be very aligned with the president-elect. But he's a seasoned hand. He understands the need for regulation. He understands the need for regulatory oversight of the securities markets. He'll be thoughtful about it. He's been nonpartisan too. He worked for Arthur Levitt in a senior capacity for a few years as well at the SEC. So I think it's a very solid choice, and the SEC will be in good hands with him.
Hey, Sheila, it's Julie here. It's great to see you. It's been a while.
Nice to see you.
I can't recall, Sheila, if you are a Bitcoin holder or if you are a crypto investor at all. Have you invested in that?
I do not own Bitcoin. I was a board member of a company called Paxos for a while that issued a stablecoin, still issues a stablecoin, and now I'm an advisor to Ripple, also on their stablecoin initiative. I do think stablecoins have great promise in making our payment system more efficient, more timely, less expensive, especially international payments. So I think that is a technology that has promise for socially beneficial uses, and I hope this administration will think about ways to create a regulatory environment that promotes responsible uses of it. I do not own crypto. I do not own Bitcoin at all. No, I don't. And I tell young people now, as you know, I write books for young people. It's a speculative investment, and it's made people a lot of money. But I think for young people, amateur investors, stay in the S&P 500 stock index.
And Sheila, when you talk about responsible regulation of the crypto industry, it feels like certainly the crypto industry has been ecstatic, I think is not overstating it,
right,
about the election of Donald Trump. Atkins is one of the folks that they were really pulling for as a candidate to lead the SEC. You've said you think he is a responsible regulator. Do you have any concerns about the under-regulation of crypto under him and or this incoming administration?
Yeah, well, I think we basically have no effective regulation right now. And one of the problems with the Biden administration's approach, and I'm a fan of Gary Gensler, I think he did a great job in a number of areas. But on this one, I think the approach was kind of to use securities laws as a weapon to shut a lot of it down, where I think a more constructive approach would be to create a regulatory environment that would foster the good uses of it and help force out the bad actors. It's kind of a cesspool out there right now. It's very hard, right? Because there is a lot of illicit use of it. There's a lot of illicit use of the banking system as well. But having a federal regulatory regime that helps the good players develop and keeps out the bad actors, I think that's really what's the objective that you should pursue. So it's like people say, well, they want to deregulate crypto. At the federal level, crypto's never been, it's kind of been, they've just tried to keep it out as opposed to regulate it or create a regime where it would be regulated. And ironically, I think that's what most of the crypto industry wants. I think they agree that for that market to become credible and really grow, it needs proper regulation.
Sheila, switching gears here, Elon Musk heading to Capitol Hill tomorrow, of course, heading up our new Department of Government Efficiency. Interestingly, Sheila, he has talked about how he would eliminate the CFPB, the Consumer Financial Protection Bureau. Your thoughts on that?
So it's a head scratcher. That budget's less than $700 million. That's like 0.01% of our $6.75 trillion federal budget. And look, I think we've gotten very good bang for our buck when it comes to the CFPB. It was created to fill enormous regulatory gaps and consumer protections, which frankly were a key cause of the great financial crisis and the Great Recession that ensued. Since we've had the CFPB, we've had stable mortgage markets. We have low default rates. We've got homeowners, homes are now, again, not a way to strip equity, but to build equity. It's something like $35 trillion in home equity now. So they've done a great job with the housing market, but more generally with credit products. They've created protections and enforced protections that weren't there before. About $20 billion they've recouped for consumers with various bad practices among certain industry lenders. They've got rule proposals out to reduce the cost of credit cards, which may be something Mr. Trump would like to do. And so I think it's a good agency, and he can put in his own director. Why spend and waste a lot of political capital trying to eliminate the CFPB when he can put in his own director? The director serves at the pleasure of the president. His previous director, Kathy Kraninger, I thought did a good job. So I would hope that Mr. Trump would look at the CFPB as an agency well equipped to help his core constituency, middle-class working families who helped get him elected. There may be different approaches. Some things the CFPB is doing he may not like, some he may. But my gosh, you have this agency with significant authorities to help middle-class families. And I would think he would want to assess that as a way to align with his objectives to help that constituency, not abolish it. I mean, that'll make the banks and big tech firms happy. But, that's not who he should be listening to in terms of evaluating whether we need the CFPB.
Sheila, you mentioned credit cards there. I want to just emphasize that, because whenever I hear Trump and Bernie Sanders agree on something, I find it very interesting. And they do seem, Sheila, to agree on this idea of capping credit card interest rates. Yeah. I'm interested and curious to hear your thoughts on that.
Well, he doesn't have. There's no legal authority to do that. I mean, the CFPB doesn't have it. They can address excessive fees, but interest rates are that's really the purview of the Fed, and you can't across the board interest rate cuts would bring us inflation back probably. So they don't have targeted authority to just reduce credit card rates. So I don't know how you do that unless you pass it by legislation. If you do that, there will be some higher risk borrowers who will probably not be able to get a credit card. That, maybe some people, this whole idea of risk-based pricing and be able to charge a lot for people who are higher risk, at some point that's damaging to those people. And so I think I don't know if 10% is the right number, but I understand the notion. I think it's very difficult to execute. You need to get congressional authority. Plus, you also need to make it across the board, because if you just cap those credit card rates, people are going to be going to payday lenders, pawn shops, et cetera, which are really high cost, and you want to avoid that. So I think actually, again, look at the CFPB. Fees are also a big part of the cost of credit cards and other financial products, and that would be a more targeted way to try to provide some consumer relief in a way that wouldn't be inflationary if you just tried to ratchet down interest rates across the board to lower consumer credit costs.
Sheila, going back to the concept of Doge for a moment and this idea of cutting government costs. I know you've written recently about U.S. government debt and our debt to GDP ratio and how that deficit is proving to potentially be problematic down the line. I guess the question is when, right? I talked to Rick Reeder recently of BlackRock, and he said it's not the shark closest to the boat right now, and that's how the market sort of prioritizes things. What would make markets pay more attention?
Well, it's a good question. Investors have not shown they have shown some concern, but it's not very pronounced yet. And so I think lost investor confidence in U.S. Treasury debt could happen suddenly, or it could happen gradually. It'll be painful no matter. It's going to happen if we don't get our fiscal house in order, and it's going to be painful no matter what. I really worry about what's going to happen during the next recession. Now, let's face it, there's going to be another recession. That's just the matter of, free markets, they go up, they go down. And when we get into another recession, if we still have these sky-high deficits and debt already, to issue a lot more debt to provide the relief that people are going to need as the tax base is shrinking, you're in a recession, will investors still buy that debt, and at what price? And I fear that could really be the precipitating factor in creating a crisis. So they need to deal with it now while the economy is strong, growing. It's ridiculous to run deficits this high when the economy is running close to 3%. it's, now's the time to be looking at ways to tackle this. And that's another thing that's so disappointing about Mr. Musk's targeting of the CFPB, which is, pocket change. We need some big ideas on this. We need some bold leadership, some creative thought. He's a very talented person. I would hope he would apply that mega brain of his has to the larger problem. I don't want this thing to devolve into just targeting agencies that are unpopular with particular constituencies.
Yeah, well, I guess there's still time, Sheila. He hasn't actually started the
there is.
job yet. So we forget. We were talking about it like it's
Right.
already happened. So we will see, and we'll check back in with you. It's really good to see you. Thanks so much for joining us.
Nice to see you. Great. Thanks. Bye-bye now.
Well, we were just talking about Paul Atkins having been named as the next Securities and Exchange Commission head, and that's given another little juicing to Bitcoin here today. Bitcoin pushing back above 99,000, closing in on 100,000 once again. Now, I believe the record, the highest price that we have seen for Bitcoin was 99,655. So it hasn't yet taken that out, but it's going in that direction.
Paul Atkins was the headline there, right?
Right.
I mean, Trump coming out and saying, listen, he's my guy, he's who I want to lead the SEC, and making a point to say, when it comes to digital assets, Mr. Atkins, in Trump's words, understands how crucial they are.
Right. I mean, the funny thing I think about this move is that there didn't seem to be any doubt in crypto fans' minds that whoever the SEC chair was going to be, it would be a digital asset ally. So the fact that it's still getting that leg up, even though it's sort of confirmation of what many already suspected, I don't know. Maybe it tells you.
One more uncertainty to bed. Now you got a name,
guess so.
you got a person, you got a resume to look at. Sure.
Fair enough.
Sure. While we are wrapping up today's Market Domination, don't go anywhere. We've got you covered with all the action following the closing bell. Stay tuned for Market Domination Overtime.
There's the closing bell on Wall Street, and now it's market domination overtime. We're joined by Jared Blickery to get you up to speed on the action from today's session. Let's start with where the major averages ended the day, near the highs of the session, we should say. The Dow up more than 300 points, about 309 points, about 0.7%. It looks like closing at another record. We did get comments from Federal Reserve Chair Jerome Powell today, speaking at a conference and seeming to indicate that the Fed would still be deliberate in its interest rate cutting cycle. Still not clear whether that means a cut is coming in December or not. He also indicated that he doesn't think the so-called notion of a so-called shadow chair of the Federal Reserve is something that will indeed come to pass. And the market may be reacting to that part of the commentary, unclear, but we saw stocks moving higher towards the close here. The S&P 500 also closing at a record, up 0.6%. I think we're at 55 now in terms of the record closes this year for the S&P. And the Nasdaq also closing a record and leading gains, up 1.3%. This has been a really interesting week in terms of the non-broad nature of the rally. And you see that even with the S&P equal weight, which is little change today. Jared, it's been big tech that's been leading the gains again this week. So much for the broadening.
It has been U.S. tech, period. And I'm going to show you that in a second. First, I want to just linger on the VIX and show you it dropped below 13. So we had a 12 handle. That's very risk on for the VIX earlier today. But let's skip. I'm not getting the words out right here. Let's skip right to the tech sector. We have XLK up 1.83%. And I said it's all about tech, but also consumer discretionary. Let's not forget that Amazon and Tesla are in consumer discretionary as well. Those were the only outperformers. Everything else was either underperforming or in the red. Energy led the way down over 2%. Materials down 1%. But let's take a look at the Nasdaq 100, where we have most of the mega caps. You're not going to see Berkshire Hathaway in here, but everything else. And Nvidia indeed up 3.5%. Amazon up 2%. Meta just barely positive. But within the sector action, I just wanted to point out, I'm going to go back here. We had record closes for the XLK, that's tech, consumer discretionary, and communication services. And I also mentioned that it was not just profitable tech, but unprofitable as well. Here are the ARC Innovation holdings, and if we sort by performance, we're going to see Roku up almost 10%. Coinbase, that's a crypto play. We'll look at Bitcoin in a second. That's up 7%. Most of these issues in the green today. Contrast that with Chinese tech, and you're seeing a lot of red here. So U.S. tech just really favored, and especially those larger names. And let's check out Bitcoin here, because Bitcoin was kind of in a holding pattern the last few days. I'm going to put a 10-day chart on here, so you can see it was just wandering and meandering around a very low range, and it finally broke to the upside. Now we're at 98,900. We've been as high as 99,000 and change, and of course 100,000 is a big target everybody has been looking for. But let me just show you what's been happening in crypto land over the last 10 days. Actually, let's zoom out to a month, because we've seen some incredible gains here. XLM up 445%, Ripple up 375%, Cardano up about 265%. So we've really seen the crypto rally broaden out here. So interesting dynamics at play, not only in equities, but also the crypto world. Josh.
Thank you, Jared. Record day on Wall Street. The Dow, Nasdaq, and the S&P 500 all closing at new highs. And joining us now is David Miller, co-founder and CIO of Catalyst Funds. Dave, great to see you.
Great to be here.
So why don't we start with Jay Powell? Why not? Speaking at the media conference today, some of the highlights, David, basically, listen, the Fed can afford to be cautious here as we lower rates back to the neutral level. Inflation, he says, no surprise, it's not back to where we want it. I thought really the key line, though, was when he talked about the economy, sounding constructive, basically saying, listen, there's no reason, Powell, saying the economy can't keep right on growing. But what did you make of it? What were your highlights?
Yeah, I think, frankly, I think when they cut 50 bips, there was not this huge need or urgency around that. You look at the unemployment numbers, we're looking around 4%. You look at inflation growth, it's a little under 3%. Unemployment at such a low level, interest rates don't really need to come down for the economy to stay healthy. So I think they kind of realized that their more aggressive posture earlier in the year for rate cuts was unnecessary. And if they want to keep inflation in check, they probably shouldn't go ahead with their earlier plans of several additional cuts from here.
So I guess I'm trying to figure out what market participants want en masse at this point. Do they want to cut? Do they not want to cut? What happens to stocks if they cut? What happens if they don't cut?
Well, I'm sure market participants would love to have a cut. The question is, do markets need a cut, or for unemployment, do they need a cut?
I guess I'm asking, what's really being priced in at this point?
I think they're probably pricing in one more cut, maybe two more cuts. But frankly, I don't even think they need those because there's just not the economic justification for it. Relatively record low unemployment, inflation's relatively in check. We have a pretty healthy economy. There's no real need for it. So, they'd probably expect one or two cuts, but it's probably more just that the Fed already positioned that's making that likely to happen.
And we were talking, David, off camera, and we were asking you, listen, what's a buy right now? What are you constructive on? And you mentioned right away gold. Why gold? Why the yellow metal?
Well, I think the big reason for the yellow metal, especially right now, is what has fundamentally changed since 2022 relative to the petrodollar, the US dollar being the world's reserve currency. And that is essentially when the US seizes the Russian central bank's money, no other BRICS type country that doesn't have perfect relations with the US and EU is going to want to be in that position. And obviously they can seize dollar or euro denominated assets, but they can't seize gold. And you can see these BRICS countries and the central banks in general have bought over 1,200 metric tons of gold in 2024 pace. They bought over 1,000 metric tons in 2023. The gold miners can barely keep up to supply that demand from the central banks for this transition from the dollar to gold.
Interesting. So it's sort of a geopolitical hedge. Is that how you think of it?
It is a geopolitical hedge, but really what is a hedge in terms of people not wanting to be in the position that the same thing that happened to Russia could happen to them. If you're China or India, the last thing you want is this ability for the US government or the EU to just seize your sovereign assets.
Does Bitcoin achieve the same thing?
So Bitcoin, I think, is a bet, while gold is for central banks. So central banks can look at it as an alternative currency. Nobody really wants the renminbi or the yen or something like that as an alternative to the dollar, but gold really can be a respected alternative. Now, there haven't really been countries that have adopted Bitcoin, but it achieves the same purpose for a retail investor that wants to bet that we're going to be moving more and more towards Bitcoin. Bitcoin's a pretty simple bet. If more people adopt it, the price will go up. If they don't, it won't. And I think it's probably a reasonable bet that that'll continue, especially given the change with Trump's policies suggesting they want a Bitcoin reserve is pretty much the opposite of what Gensler was positioning in the previous administration.
David, a separate question I had for you. So Trump today making news. And one thing he did that I thought was really interesting was he said, listen, I want Gail Slater to be running antitrust enforcement at the DOJ. And when he made that announcement, he goes off on big tech, right? Big tech is running wild. They're stifling competition. They're cracking down on Americans and little tech. When you as an investor and a CIO, and I know you generally, you like big tech. When you hear that, David, does that register you? Is that meaningful? Is it just noise? What do you make of it?
I don't think it's noise, but I think it is a signal as to what an amazing position these companies are in. There's never been a time in history where companies had such incredible global market share, such high margins, such significant tailwinds to their growth that you'd ever hear President-elect say things about U.S. companies like that. Maybe they'd be saying things about that like regarding foreign companies, but these companies are just frankly in such a strong position that Trump feels like he's in a position to say that about these companies. And frankly, when a company gets considered to be a monopoly by the federal government, that hasn't historically been a bad thing for their stock. If you look at companies, whenever the federal government started considering them to be a monopoly, those have been some pretty big winners in terms of a stock price thereafter.
I mean, Microsoft, it wasn't for a long time, and then it was eventually. I mean, so it doesn't necessarily work out great in the short term. So you have to wonder if this is going to create at the very least, create some near-term turbulence for some of the large cap tech companies.
Oh yeah, I have no doubt that near term, that's not amazing news, but I guess Microsoft's a great example. Microsoft, people were really cracking down on Microsoft in the late 90s. If you owned Microsoft from the late 90s to today, that'd be, tremendous life-changing windfall.
Yeah, boy, you had a tough time in the middle there, though.
No, that's true.
Let me ask you, sticking with Trump, lots of ways we could go, deregulation, taxes. I do think tariffs, though, are still something really, that's front and center for investors. And you're a CIO, I'm sure you're getting questions about this. I mean, when you think about tariffs, good policy, bad policy? What does it mean for the economy? What does it mean for the markets?
Sure. Well, tariffs are certainly complicated because if you take Trump purely at his word, yeah, it sounds bad. But the real question is, does he actually intend to follow through with all of these, or is he using them as a negotiating chip for countries that are using tariffs against us? If he's using them as a negotiating chip, that's really smart and a good thing for us.
That is how, I mean, I've heard some of his surrogates give interviews, David. At least that's how they position. Like, we're going to tariff you the way you tariff us until you back off.
Yeah, and frankly, I mean, I think if you look at China and the way that they tariff us, it kind of makes sense to be in that position. And frankly, you don't want your whole supply chain tied into a country that could potentially be an enemy adversary against us. If they go for Taiwan, do you really want to have that type of dependency on China? So if they're using it as a negotiating chip, that's a net positive. If they're just doing it in a very significant way, broad brush, that's clearly a negative. So it's really all in the nuance and what he actually does.
Brush or scalpel, we'll see. David, thank you for joining us. Appreciate it.
Thank you.
Time now for what to watch Thursday, December 5th. Starting off on the earnings front, we got some big earnings on deck for tomorrow, including Lululemon, Kroger, and Hewlett-Packard Enterprise. Lululemon announcing results for the third quarter. Analysts expecting sales growth to be similar to the previous quarter, with fewer new offerings in women's apparel, but robust revenue gains in China.
Taking a look at the Fed, we'll be getting some more Federal Reserve commentary from Richmond Fed President Tom Barkin. This coming after those comments today from Fed Chair Jay Powell. Powell saying that the strength of the economy gives the Fed the ability to take time on future rate cuts.
And moving over to housing, weekly mortgage rate data from Freddie Mac is coming out in the afternoon. Last week, the 30-year fix dropped to 6.81%. Second time in 4 weeks, rates have gone down.
And finally, we'll be getting some more initial jobless claims numbers in the morning. Economists forecast that will tick up to 215,000. This coming after claims dipped in the week prior, giving us more insight into the strength of the labor force.
And coming up, President-elect Donald Trump's picks of Paul Atkins as SEC chair certainly is a pro-crypto one, but some Democrats still calling for crypto regulation. We're going to speak to Senator Kirsten Gillibrand on the other side about the move. Stick around, much more market domination, overtime still to come.
President-elect Donald Trump has tapped Paul Atkins, a cryptocurrency advocate, to lead the Securities and Exchange Commission as its next chairman. That move comes after the November election saw a number of pro-crypto candidates, including Trump himself, win their races. Joining us now, one of the few Democrats who's been calling for crypto regulation, Senator Kirsten Gillibrand. Senator, thank you so much for joining us. So first of all, let's talk about Atkins. Do you think he's a good choice to lead the SEC? And do you think that this is also a good first step in sort of changing Washington's approach to the crypto industry?
I'm sorry about the bells going off. That means a vote is being called. So I apologize for
That's okay. We don't hear them, actually.
But you can't? Oh, that's great. So I think Atkins could well be a very good SEC head. He's clearly has the right kind of experience. He is knowledgeable. I think he also is someone who is going to be able to work with not only lawmakers, but industry to provide the oversight and accountability that particularly cryptocurrency and blockchain and digital assets need desperately. We need someone who will actually do the regulation, create the rules of the road, create safety and soundness, create transparency and accountability, create consumer protection, and not be afraid to work with lawmakers in a productive way. I think regulation through enforcement has been a failure and has been very devastating and destructive to the industry and to the economy. I think it's harmful with regard to industries wanting to be located in the United States and wanting to participate here without certainty. It's very hard for investors and it's hard for participants.
So Senator, Paul Atkins in, Gary Gensler out, leaving next month. Certainly many in the crypto industry, Senator, who would come on this show made it clear they did see Gensler as an adversary. I'm curious to get your take. What did you make of his tenure?
I also thought he was adversarial, and I didn't understand what he was doing. It made no sense. We had New York businesses that were seeking to become broker-dealers who had their applications in for over a year, and the first thing they hear from the SEC is a Wells notice, some enforcement action. I mean, it was really untenable to be a New York-based business or a US-based business and have your primary regulator be so adversarial to the notion of your business entirely. And we want strong US businesses. We want to compete worldwide. Cryptocurrencies, blockchains, DeFi, these are industries that can locate anywhere around the world. And we want them based in the United States. For New York, I wanted to maintain its leadership as the center of the world financial markets. And when it comes to digital assets, I think it's important that we have participants and market leaders based in New York.
Senator, so a lot of that is obviously on the regulatory side and presumably will change under a more friendly regime. I'm curious what still needs to be done on the legislative and on the policy side. What does Congress really need to prioritize when it comes to the crypto industry?
So Congress has a number of bills that we've been looking at for a couple of years now. In the House of Representatives, Chairman McHenry and Ranking Member Waters worked quite well together on stablecoins legislation, market structure. Ultimately, I don't think the House ever decided whether to do a stablecoins bill, and so we never got one to pair with the one we had in the Senate. And we've never had a hearing on a market structure bill here in the Senate. So we've not had a piece of legislation that we could do in both chambers in this Congress easily. So I'm hoping in the next Congress, we can reintroduce market structure here in the Senate side, a stablecoins bill on the Senate side. I hope that the House can start working again on those two pieces of legislation so that we can work together collaboratively on a bipartisan basis and a bicameral basis and actually pass meaningful legislation to create basic rules of the road.
Senator, what about this idea of creating a Bitcoin strategic reserve? Is that an idea you think you could get behind, setting up such a reserve, maybe even adding to it?
I don't know what the purpose of a Bitcoin central reserve is, and I haven't really seen the details of any idea about why you would do that and why that's important. I think it would have an obvious impact of supporting the Bitcoin industry, which in and of itself isn't good or bad. I just would want to know what the reason is.
Senator, I'm curious, one of your colleagues, Cynthia Lummis, has been also alongside you an advocate for reforming the industry. I think she's also pretty public that she owns Bitcoin. I'm curious.
Yes.
I'm curious if you own it. I mean, we're seeing the price action here. It's going back up towards 100,000.
Well, I wish I'd bought a lot, maybe 9 years ago. No, I'm not a Bitcoin owner or a cryptocurrency owner. But it's been a joy to work with Cynthia Lummis. She is very smart. She cares deeply about the industry. Wyoming has a lot of participants. New York has a lot of participants. We also have a lot of founders in our states. And so we very much care about allowing an ecosystem to exist in the United States where these companies can thrive and have the appropriate level of oversight and accountability so that U.S. participants can be protected.
Senator, I was impressed in the run-up to the election how many crypto traders, investors, analysts, strategists came on this show and really expressed their excitement about Trump moving back into the White House because they saw him as an ally. And I am curious whether you think your party, the Democrats, generally have more work to do to convince the crypto community that, you know what, Democrats can be an ally and a friend as well.
Well, I am a Democratic leader in this space and among the top, most knowledgeable people about this industry. So by my own actions, I am demonstrating that Democrats have leaders in this space and want to have the kind of regulation and regulatory framework that will protect U.S. consumers and allow the industry to thrive here. So I am that leader. And there are other Democrats in both the House and Senate that have been very focused on trying to do regulation. You can look at Debbie Stabenow. She was the chairwoman of the Agriculture Committee who authored her own legislation for commodities oversight and accountability and regulation. We also have Ron Wyden, the chairman, Democrat, of the Finance Committee, who has the jurisdiction over our market structure bill. So just there you have 3 senior leaders in the Democratic Party who are knowledgeable and eager to do the work. I think the real impediment is first perception, but second is a lot of people just don't have a deep knowledge base. And so this is a fairly complex new industry, and not everyone has taken the time to learn it. I've been urging my colleagues to do so. It's not that scary once you figure it out. And there's a lot of opportunity, especially in my mind, for the unbanked and underbanked, for those who do business cross-border, for those who have family members worldwide. There's nothing better than having access to cryptocurrencies for frictionless banking and frictionless sending of value, of sharing of value, of trading value. And so it's got so many uses. And then that doesn't even begin to address the brilliance of blockchain. Blockchain can be used for healthcare, for health records. It can be used for organizing. It can be used for ownership. It can be used for 1,000 different applications that could transform literally any industry. And so we want to utilize these advancements and this new technology that is so interesting and so powerful for how we create literally a new way of doing business and a new way of communicating worldwide.
Senator, I want to switch gears because I do want to ask you about some of the other goings-on in Washington. In particular, I want to ask you about the Defense Secretary nominee, Pete Hegseth. There is some talk that he might step aside as the nominee. There has also been some reporting that maybe Ron DeSantis could be another choice. Obviously, there are some political divides within the Congress on any of these candidates. But I'm curious, especially given your positions on committees, including armed services, if you would find, for example, DeSantis a more palatable option.
Well, I don't have a great deal of knowledge about Governor DeSantis or his experience with regard to the Department of Defense and how he would be a leader. But if he was nominated, I would fully review his record and I would meet with him. But if the president-elect does want to look at new nominees, there's extraordinary talent in the U.S. Senate, particularly members of the Armed Services Committee who have served. Joni Ernst, for example, is someone I've worked with, I've traveled the globe with, I've been to Afghanistan with. She's the kind of person who would be a tremendous leader of the Secretary of Defense of the Armed Services. She has extraordinary knowledge base. So there's many possible candidates that the president-elect might choose from who would be very much aligned with him and his goals. So I don't think there's a lack of possible candidates who could get confirmed on a bipartisan basis.
We shall see what happens on that front and hopefully check back in with you. Senator, thank you so much for your time. Really appreciate it.
Thank you.
That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned. Welcome to Asking for a Trend. It's that time of year again. Spotify Wrapped is here. Music fans can look through their listening activity in 2024, but this year there's a new AI edition. The new feature incorporates 2 AI hosts from Google's Notebook LM, exploring the way your music taste has evolved this year. Editorial director at Google Labs, Stephen Johnson, joined us now to discuss, along with Yahoo Finance's very own Akiko Fujita. Stephen, it is great to see you. So Spotify users, They wait all year for this, that annual Wrap feature. Only now, Stephen, Spotify has partnered with you all. We have this Wrapped AI podcast. Walk the viewers through this. What is this all about?
Yeah, so about 3 months ago at Notebook LM, which is one of Google's new AI products, it's a kind of virtual research assistant that helps you with the projects you're working on. We rolled out a feature called Audio Overviews, which basically takes the documents you're working on, the story you're writing, the syllabus for your class, and turns it into an AI podcast-style conversation between two virtual hosts. And that has kind of taken the world by storm over the past month or so. People have been really excited about it. It's kind of gone viral on TikTok and on Twitter. And about 2 months ago, Spotify reached out to us and said, hey, we have our fantastic end of the year Wrapped feature. What if we created a special version of Audio Overviews for all of our users, or a good number of our users, where the two hosts are discussing the year in music for that particular person. And so that's what we've built.
Stephen, I have to say, I have been a Google LM user since you launched that, but I was curious how this podcast would play out when I found out you were partnering with Spotify, in part because my Spotify playlist is pretty much dominated by my 2-year-old's music. I want to listen. I want the audience to listen to part of that podcast and then ask you something on the other side.
Speaking of the perfect soundtrack, let's talk about your top track, the song that you just couldn't get enough of in 2024.
Drum roll, please.
It's Jamming by Bob Marley and the Wailers.
Jammin', what a classic. An absolute banger.
You listened to it 102 times. 102, that's a lot of jamming.
And it all started back on June 25th. You know what's really cool? That puts you in the top 0.001% of listeners globally for the song.
That's amazing.
Yeah.
I mean, Jamming is such a feel-good song. It's impossible not to move when you hear it.
So that pretty much spot on. That is my daughter's favorite song. But I'm wondering how this came together. Like, I have used Google LM in uploading my documents. In the case of Spotify, it's about a music playlist, sort of the background to what these songs are about. What kind of data does this pull from in order to put this podcast out?
Yeah. I should say it's Notebook LM, not Google LM. So basically what we received from Spotify in a kind of secure method, we don't have any access to this data that we actually see or store in any way, but is basically the kind of the history of your music for the year, right? The songs that you played, where your fandom kind of ranks for that particular audience or artist or that song. And we took that and basically applied the general approach that we take with Audio Overviews inside of Notebook LM, which is to look at this information and basically find the most interesting pieces in that data. The whole beauty of this approach is that we have a slogan inside of Notebook LM where it's like, make anything interesting. So whatever you give it, we'll figure out a way to turn it into an engaging conversation. And so in this case, the software effectively looks at your listening history. It knows a little bit about the kind of the artists in question and their records and their sensibility, which you could hear in that discussion of Bob Marley. And it turns that into this kind of playful banter discussing what was interesting about your year in music.
You sit in a unique position within the Google infrastructure. You're with Google Labs that allows for, I would imagine, a little more experimentation. And I wonder, as you think about sort of the next use case for AI, how you're thinking about it, what you've learned from the huge popularity of something like a Notebook LM on what could be applied next.
Yeah, I mean, I think one of the core things that we've seen this year, particularly with our experience with Notebook LM, is the value of an AI that's personalized based on your information. So that's been a core idea of the Notebook LM experience from the beginning. Audio Overviews are taking that into audio, but the idea is you define the documents, you define the sources, and we make it easier for you to engage with a state-of-the-art model like Gemini that is actually talking about the information that matters most to you. Whether you're asking questions in a text chat or whether you're listening to an audio overview, podcast-style conversation. And I think when people get that experience for the first time and they're like, oh, I loaded up all the documents from the project that I'm working on at work, and suddenly it's like I have this assistant that knows everything I've been working on, that is just an extraordinary a kind of sea change for people in thinking about the utility of AI. So we think, inside of Notebook LM, our biggest problem is there's so many things we want to do to build on that framework. Once you have that framework, it really changes a lot of the possibilities.
Stephen, I'm curious, this Wrapped AI podcast we've been talking about, where is it actually available, Stephen? Is it just US? Is it also overseas? Is it free? Do I have to be a premium subscriber? How does it work?
You dropped out there briefly, but the feature is available to, I believe it's premium. The big limitation is that it's mostly in English language countries. So it's in the United States, it's in Canada, it's in Great Britain, it's in Australia, it's actually in Sweden. But there are a bunch of countries around the world, because it's only in English. Audio Overview technology only supports English right now. So it's limited in that sense.
Stephen, it was great to have you on the show today. Thanks so much for your time, and thank you, Akiko, as well.
Thanks a lot for having me.
The Dow, S&P 500, and Nasdaq hit records as tech surges and investors digest Fed Chair Powell's comments on the U.S. economy. Yahoo Finance's very own Josh Schaefer joins us now with the trading day takeaways. Josh.
Yeah, Josh, we were tracking for record closes across most of the major averages today, and one thing I was watching was Fed Chair Jerome Powell's interview at the New York Times DealBook Summit at 1:45 today. Kind of curious if that was going to shake up markets at all, but the Fed Chair really didn't say much to change how the markets have been thinking. So he said the Fed can be cautious in cutting rates, Josh, and he said can be cautious in a good way. So he made a lot of commentary about how good the U.S. economy has been doing, the U.S. economy largely in better shape than when the Fed first started cutting rates in September. So I want to take a look.
That was sort of the key line, right, that you touched on. I mean, he just sounded constructive, right, saying, listen, there's no reason that the economy can't continue growing.
Can't continue to keep growing, right? Yeah. And as we've talked about time and time again, if the economy is growing and that is the reason why the Fed doesn't cut rates, most strategists that come on air with us would say that's a good thing for stocks, right? The U.S. economy to be in healthy shape. I wanted to just highlight briefly one thing that he pointed out. He was talking about the unemployment rate, because remember, we have a big chart here, but if I circle our trend, this was when the Fed started cutting rates, right? The unemployment rate had been ticking up pretty much all year. And the question was, oh boy, is there a concern in the labor market? Is the unemployment rate going to keep going up? So they slashed rates by 50 basis points. Since they've done that, unemployment rates come down from 4.3 to 4.1%. He's feeling a lot better about the state of the labor market right now headed into 2025. Of course, we're going to get an update on that, Josh, on Friday with that November jobs report. But right now, the Fed seems pretty happy with the labor market picture, which again is overall, I think, just a positive sign for the stock market.
All right, Schaefer, point number 2.
Mag 7 stocks are taking off again, Josh. So I'm going to take a look here at just the market action that we saw today and over really the last 3 trading days, sort of the week, right? So we're looking here at the Nasdaq 100. You can see NVIDIA up almost 4%, Microsoft, Amazon, Alphabet, Tesla, all up over 1%. Zoom it out to a 3-day. Your story is going to be pretty similar. Look at the dark green on your screen, right? These are all outperforming the S&P 500 over the last 3 days. That's been sort of your sector action for the week too. When you take a look at that, it's tech, right? Tech has been leading. One of the reasons that we've sort of been trying to figure out, okay, why is tech leading right now, right? There's not a lot of news per se coming out, but DataTrack highlighted something interesting to me, Josh, over the weekend. So this is earnings revisions over the last 30 days. You can see Microsoft and Apple have had negative earnings revisions over the last 30 days, but NVIDIA's up, Alphabet's up, Amazon's up. Now watch when I flip to this next screen, look at what's down. The S&P 500 and the 10 largest non-tech companies. So positive earnings revisions have been happening when it comes to big tech. That's usually a good sign, right? Earnings are what drive stock prices ultimately. So if strategists, analysts are feeling better about tech earnings for the next quarter, for the next year, it would make sense that maybe that's where some of that buying action is.
It was interesting too. I mean, just another wrinkle for big tech investors to think about. Today, Josh, when Trump says, listen, I want Gail Slater, right, to head up antitrust enforcement at the DOJ,
right?
You know, FTC veteran. And when Trump made that announcement about Slater, he really rips into big tech. I mean, they're running wild, he says. They're stifling competition. They're cracking down on Americans and little tech. I mean, interesting.
It's been interesting because with these Trump nominees, you've seen a lot of stocks move on that, right? And I pulled this screen back up just to point it out one more time, Josh. You're saying sort of perhaps scrutiny coming to big tech just wasn't reflected in the market today. Will be a trend to watch as we learn more about it, but on the 1-day move, Big tech stocks didn't seem to care today. A final one for us, Josh, that I had from BlackRock's 2025 outlook that I attended today. So the BlackRock Investment Institute, very bullish on U.S. equities. They're actually going more overweight on U.S. stocks headed into 2025. So they're not really an S&P 500 target crew, but they'll tell you where they're allocating their money. And I thought this was interesting, sort of just explaining U.S. equity outperformance. So here's your chart in white. This is U.S. stocks, clearly outperforming the rest of the world. And I think the real takeaway here in the trend is earnings, right? We were talking about earnings or what drives stocks. Look at how similar these charts are. And so when you see that earnings are clearly outperforming in the US, they're actually largely attributing that to AI. And they think the broadening of that AI trade, maybe in a sector like utilities next year, is kind of a key part of this. But they keep seeing US earnings outperforming the rest of the world, keeps them positive on US stocks.
Let's stick with AI, the way Salesforce reports it just roared today. You wonder, did that just give traders and investors confidence that AI trend looks like
Salesforce is considered one of those where the AI trade spreads, right? Salesforce is kind of that next step of the AI trade, so it's definitely something people are excited about.
All right, thank you, Joshua. Stick around, much more asking for a trend right on the other side. Lamborghini debuting a Miami-inspired Urus SE at a private event today during Art Basel Week. Company is enjoying a banner year when it comes to deliveries and continuing to go full throttle when it comes to EVs. And joining us now is Lamborghini Chairman and CEO Stefan Winkelmann and Yahoo Finance Senior Autos Reporter Pras Subramanian. Stefan, always great to see you and have you on the show. And I do want to get to this new art car, Stefan. But first, big picture, Stefan. Walk my viewers through, what you're seeing when it comes to demand to customers. How does business for Lamborghini look right now?
I think that we are in the best shape ever. We are, after the first 9 months, having record deliveries. We have record turnover and also, most importantly, record operating profit. This is not meaning that we are running for peaks because we have a very stable and long order bank. So if you order a car today, you get it in 18 months. This is an average. And also on the other side, we have very strong residual values on the used cars. So also this is a very positive sign. Then our lineup is completely new. So this is something which is an asset in these times because we have a new V12 car. We have the Urus SE, which is going strong. And also earlier this year, we presented the Lamborghini Temerario. So we have three cars which are plug-in hybrids. And this is paramount also for the success of tomorrow.
Hey, Stefan Prost here. I see the color swatches behind you, it being Art Week here in Miami for Art Basel. Talk to me about the one-of-one car that you guys created for the Art Festival. And also, Stefan, you're going to be running into a lot of high-end luxury consumers. What are they telling you about sort of their situation right now with buying luxury cars?
Alors, here we are in Art Basel, and it's the fourth time in a row that we are coming here. Is more and more something which is important for us, because the combination of exclusive cars and being also somehow a canvas now for artists is growing, and the customers want something which is unique, only made for them. And here we have with the Urus SA, which has colors which are inspired by Miami, something extraordinary, because our design center and our Ad Personam studio did this in a perfect way. And this is, for example, also the first car we are going to deliver worldwide to one of our customers. So very good. And the feedback of the customers, generally for our brand, I can speak, is going strong. We have, I also have to say, a very balanced distribution all over the globe. By far, the US is our biggest market, I have to tell you, but also in Europe and in the Asia-Pacific region, we have a very good balance. So all in all, we are never pushing too much in terms of volumes, and the customers are appreciating it. They see that we are very exclusive, and they want us to stay like this, and they are going strong and very positive about the brand so far. Let's cross fingers.
Stefan, you mentioned the Urus. I know that's a very popular model in Asia, like you'd mentioned. How is the business going in China and Asia in particular? We heard companies like GM today take a big loss there because of sort of dwindling operations. I know you guys operate in a different space, but how is that market looking for you?
The market is going down. It's a market which is in crisis now due to the real estate mainly, and this is also, let's say, affecting the luxury market. But the luxury market, despite that the automotive market in China is the biggest, for the luxury cars is not the same, because it's only covering 10%. So we are in line with this, and therefore we are not overexposed, and we have the opportunity to divert, let's say, the cars which we have more to other markets, and this is a benefit for those who are waiting in the markets like Europe or the United States.
You know, we're seeing a lot of the cars sell really well that are, the whole range is hybridized now, all electrified, part of the Direzione Cortari that Lamborghini has set up for the future of the company. How is that plan going? Do you think you might actually lean in more on hybrids, or is the EV plan set up for the end of the decade reveal of the Lamborghini EV?
The fact that we have all the lineup hybridized is very positive, because it's a simple equation. We are promising to our customers that the cars are more performing than the generation before, and at the same time, they have less CO2 emissions. More performing means that the combination of ICE engine and the plug-in hybrid system is creating an extra boost and is creating a very emotional driving experience. So this is our three cars line up, the Revuelto, Temerario, and the Urus SA. And on top of that, as you said, we will have a fourth model coming at the end of this decade, and this will be our first electric car. We think, even though, let's say, the acceptance of electric cars is flattening, so it takes longer than expected some years ago, we think by the end of this decade, beginning of the next one, is the right time to have an add-on. And it's here we have to prove that this is also going to be a very emotional car.
Stefan, always great to see you and have you on the show. Thank you so much for joining us.
You're welcome. Thank you.
Well, the Dodgers might have just won the World Series, but they aren't wasting any time trying to get better for the 2025 season. The team signed two-time Cy Young winner Blake Snell to a 6-year, $182 million contract. $66 million of that deal is deferred. And when combined with the other deferred payments the franchise owes the Dodgers, will be paying out over $1 billion in deferred money from 2028 through 2046. Joining me now is Joe Pompliano, Yahoo Finance Sports Report host. Joe, always great to see you talking sports and talking business. Let's do a lightning round here, Joe. And I want to start with that because that's a big headline. Dodgers deferred payments top $1 billion to 7 players. Is that a concern at some point, Joe? Do you think that's something the league is going to look into, frankly?
Yeah, thanks for having me, Josh. This is a super unique situation, and obviously the Dodgers have taken advantage of this loophole, if you want to call it that, more than other teams. But it's really not that much of a concern because if you think about the league CBA in general, you don't get to defer all of the money and then just pay it at a later date. The CBA stipulates that you have to pay out the money when it's due within 2 years, right? So if we use Shohei Ohtani as an example, he gets a $700 million contract. All of the money is deferred except for $2 million a year. So the $68 million that is deferred, the Dodgers have to put that into an escrow account within 2 years of when he earned that money. So if he earns that money this year, within 2 years, it has to be in an escrow account. Now, the thing that's unique about the Dodgers here is that they're owned by Guggenheim. Guggenheim has over $300 billion in assets under management. They're obviously pretty good investors. So their bet is that they're able to put that money in there and earn more money than just the interest would be able to pay them. This is why we're seeing them spread this out over 7 players worth more than $1 billion. Whereas your typical Major League Baseball team isn't going to take the risk and go invest some of this money. Guggenheim is willing to do that, and it's worked out well for them so far.
All right, Joe, topic number 2, NFL on Black Friday this year. Let's actually just take a listen to your views on that one.
This year's game was a little bit unique because it was 2 of the worst starting quarterbacks in the league today. Both backup quarterbacks for the Giants and Cowboys with Drew Lock and Cooper Rush played, and the game wasn't very exciting. Still, it averaged 38.5 million viewers, which will likely make it the most watched regular season game this NFL season, and the 4th most watched Thanksgiving Day game ever. And not to be outdone, even the Miami Dolphins and Green Bay Packers put up a huge number at 26.6 million in the late night game. Now, we don't have the final number from the Lions game earlier in the day since CBS ended its contract with Nielsen this past October, but I'm sure that'll be just as big given the Lions have become a mainstay on Thanksgiving Day for the NFL.
So, Joe, I'm actually curious, any read-throughs, any clues about what you saw on Black Friday to what maybe eyeballs and ratings could look like for NFL games on Netflix on Christmas Day coming up?
Yeah, I think there's a lot of parallels. If you think about Thanksgiving Day and then Black Friday, they kind of roll into each other. Thanksgiving Day and the NFL have always gone together. In fact, the NFL has hosted Thanksgiving Day games since it was founded in 1920. They now have 3 games. The Lions and Cowboys always play, and then they throw 2 other teams in the night window. But more than 140 million people tuned into some NFL football on Thanksgiving Day. That's an astronomical number, and each of those 3 games averaged over 30 million viewers combined. So a huge day. The NFL obviously expanded that into Black Friday last year. They did another game with Amazon this year. Amazon is seeing tremendous value out of that, averaging 14 million viewers this past year. And they're getting more signups for Amazon Prime as well, keeping people at home on a holiday where you would traditionally leave to go shopping at a mall or something like that. So those 2 things are on their own. And I think now the NFL has realized that they can sort of own all of these holidays, right? Where Christmas Day used to be an NBA holiday with 5 different games. Now the NFL is going to host multiple games on Netflix. Netflix is paying them a lot of money as well. And I would expect a huge number off the back of what we saw, a tremendously large number for the Jake Paul and Mike Tyson fight as well. Netflix has proven that they can host some of these live events and draw a big audience. Now, of course, we have to make sure that the technology holds up a little bit better this time, but I think that it's going to work out quite well for Netflix, especially considering they're placing a bigger emphasis on their advertising platform.
Joe, always great to see you. Appreciate your time. And a new episode of Yahoo Finance Sports Report, by the way, drops Thursday. That's at 5 p.m. across all podcast platforms. Stick around. More Ask for a Trend right on the other side.
And dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Now let's make some money and get a lot smarter.
I've done Yahoo Finance forever. This is a spectacular spot.
Welcome to Stocks in Translation. I'm your host, Jared Blickery.
Hello, world. I'm Ross Mack.
Hi, I'm Bob Powell, and welcome to Decoding Retirement.
Welcome to Living Not So Fabulously.
Hey, it's me, Tiffany the Budgetista, your favorite financial educator. Welcome to Capital Gains World for a few days and everything has changed.
From Wall Street to Main Street to the C-suite, we are your daily lifeline because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
Now for our chart of the day, we're looking at hiring and what companies are saying about it. Yahoo Finance's Julie Hyman joins me now with a closer look. Julie.
Yeah, it's a big week for employment numbers, isn't it, right? We got the JOLTS report yesterday. We got ADP numbers this morning, initial jobless claims tomorrow, and then the big one, of course, non-farm payrolls on Friday. But there's lots of other ways to try to read the tea leaves on what's happening in this economy and what is going on with the jobs market. And one of them is analyzing conference calls by companies to see what they are talking about. Morgan Stanley, a recent chart from them, crunching some numbers here, looking at the mentioning of hiring, right? The word hiring or talking about hiring in corporate call transcripts. And what you've seen here basically is that, of course, we saw a lot of mentions of hiring, when the job market was very, very tight post-pandemic. We know that. We saw that borne out in the numbers. Since then, it's come down, but still at a relatively high level when you look at recent history, really going back a decade here. And that is, again, reflective of what we've been seeing in non-farm payrolls numbers and some of the other jobs numbers, that it's what some economists point to as a sort of normalizing process, right? So this is essentially what we see. It's also what Aditya Bhave over at Bank of America called a low hire, low fire environment as well. So it's coming down, but we're not seeing a lot of big jobs changes made. And of course, this morning we got that ADP number. 146,000 was the number of private payrolls that were added in November. According to that report, the estimate for the government numbers on Friday, 215,000, as we expect to see a rebound after some of the hurricane effects that we saw really push the numbers down last month. So it should be an interesting report, Josh.
All right, Julie, thank you. And that is a wrap on today's Asking for a Trend. Have a great night.